The U.S. economy slowing down at the same time inflation potentially speeding up. What does this mean for you? We're going to tell you coming up on Business Matters. And good afternoon. Thank you very much for joining me here today. I'm your host, Don Ma. And of course, we got to start off with Wall Street. Stocks closed lower today because markets, they were stunned by GDP data coming in slower than expected. U.S. economic growth and persistent inflation is what we found out. This is coupled with a sell-off in large cap stocks triggered by disappointing results from Meta platforms. Now, the GDP numbers is definitely hurting the mentality that markets were hanging on to for equities in terms of high growth. Because, of course, if you don't have high growth, that's going to translate to lower than expected earnings. Now, the double whammy here was also the inflation number that came in stronger than expected. There really wasn't a silver lining in that report. But let's talk a bit more about that GDP. So the U.S. economy cooled more than expected in the first quarter of the year. The Commerce Department reporting gross domestic product rising by 1.6% in the first quarter of this year. Now, this is the weakest pace of growth since the second quarter of 2022 when the economy contracted. So it is definitely a steep slowdown from the fourth quarter's 3.4% rate, and also much less than what economists had expected. Economic growth has been slowing steadily over the past 12 months. Sharp rise in imports subtracts from the GDP. That's what we're seeing right now, and it's also contributing to the slowdown in growth from the fourth quarter, which, by the way, shaving off nearly an entire percentage point. Consumer spending as well also slowed earlier this year. Inflation also heating up by the most in a year, and this is according to new data. It's showing the personal consumption expenditures price index surging today. So how should we feel exactly about this latest number? I spoke to the chief economist at Tressis Hedge Fund and professor of global economy at IE Business School in Madrid, Daniel Lacalle. Here's what he told me. Daniel, always a pleasure to speak with you today. And the topic of discussion right now is U.S. GDP. We got the first advanced estimate from the department here, 1.6%. Just give us your general thoughts to start off.
Well, I think it's a really poor number, considering not just the estimates that were significantly higher than that 1.6%, but also the composition of GDP growth. If we look at the details, investment is really, really weak, only helped by intellectual property and software, which are figures that can be easily played around with, if to be fairly honest. Consumption is also weakening quite severely, and I think that that is an important negative. But I think that the worrying thing is that government spending continues to be the driving force of GDP. And that is obviously not a positive when you have a very dangerous combination, which is a slowing down GDP with an accelerating inflation and with an unsustainable level of government spending and government deficit.
So how can this happen, because the previous quarter, I think, we had much higher GDP here in the U.S. How can there be such a dramatic contrast? What are your thoughts?
Well, I think that the most evident contrast is that in the past two quarters, GDP has been bloated by a massive increase in government spending. So now that government spending is slowing down a little bit, what we actually see is that investment, consumption, and exports are not that good, no? I have been talking about the problem of what I call a private sector recession, which is when you actually see that the private sector is not getting any better despite allegedly positive GDP numbers. And obviously, bloating GDP is not difficult, to be fairly honest, with massive levels of deficit spending. But I think that what shows in this quarter is how rapidly the economy can slow down just by showing the reality of what was previously keeping it artificially afloat, which was massive level of government spending. So although government spending continues to lead in terms of the GDP figure, is actually one of the very few elements of growth that we see. What is showing on the other side is that consumption, investment, and obviously exports are actually weakening. And all of those are factors that show that the economy is not as robust as what the Biden administration brags about, no?
Yeah, that's a very important point. But I have a follow-up on a previous point, which is inflation accelerating from what we see from the past 3 months with the CPI and now GDP slowing. So why, I want your thoughts on this. Why is this a bad combination?
Well, it's a really bad combination because it basically says Americans are getting poorer. In a nutshell, it's basically showing how Americans are getting less economic growth, less real wage growth, more expenditures that are going simply to purchase the same amount of goods. And I think that that basically means that people are losing purchasing power and obviously getting poorer. But the reason why it's so negative is because the Keynesian narrative, what the Biden administration has been promoting, is the idea that government spending leads economic growth and that government spending and deficit spending don't matter because that is going to be a driver for the private sector growth, when it is actually the opposite. It works as a burden, no? And what it's proven right now is that the placebo effect of the last 3 quarters in the American economy are starting to fade away and showing that the U.S. economy is obviously not as strong as some people try to defend.
All right, thank you very much for your insight today, Daniel. Pleasure having you. So I mentioned Meta a few minutes ago at the beginning of the show. Let me talk to you more about that. What we're seeing is a Wall Street sell-off, and this is over Meta's plans to invest aggressively into artificial intelligence. So Meta stock plunged over 10% today, and that wiped out tens of billions of dollars from its market value. Meta says it needs to spend more than previously expected for the year, especially to invest in data centers to catch up with AI frontrunners. And that spooked investors because shareholders are sort of uneasy about the increase in spending in AI, which could come as high as potentially $5 billion. Investors fear this could be another costly endeavor for Meta. If you remember, its augmented and virtual reality business posting nearly $4 billion in losses in the last quarter. So all this is happening despite Meta's first quarter profits more than doubled year on year and with revenue up. Now let's go to the airline industry. It's feeling the pain, apparently, from Boeing's safety crisis. American Airlines, Southwest, both taking a hit to their bottom lines. NTD's Virginia Gibson has more on this.
Boeing safety trouble sending shockwaves across the industry. American Airlines CEO Robert Isom delivers a stern message to the plane maker.
Get your act together. And it starts with producing quality products one at a time off the assembly line. Get back to the basics.
Isom says he'll buy fewer Boeing aircraft than previously projected because of the safety issues. American lost $226 million in the first quarter compared to making a profit of $33 million in the same quarter last year.
I can't tell you if they're making progress or not because it's all actions that matter, not words. And we're continuing to work with them. We'll do everything we can to support Boeing. We need them to be successful in the long run.
Higher fuel costs also hit earnings. Southwest Airlines also reporting earnings today, seeing a loss this quarter of $231 million. This loss is bigger than losses in the same quarter last year. Previously, Southwest expected to receive 46 Boeing planes. Now it's receiving less than half of that. The airline is resorting to older planes and cutting staff to save money. It expects to end the year with 2,000 fewer employees. This comes as flight attendants Wednesday voted for a 22% pay raise. Out of 20,000 flight attendants, 81% voted on getting this raise immediately. Southwest says it's thrilled to have an agreement with its flight attendants. Virginia Gibson, NTD News.
And just quickly, I want to bring your attention to their stocks. Southwest here fell 7%. American Airlines were up 1.5%. So keep that in mind. And we're seeing a speed bump for the transition to electric for FedEx and UPS. There's a short supply of electric vans, to put it simply. As well, the delivery giants are dealing with battery shortages, high EV prices, and startup electric van makers also going out of business. So a lot of headwind here. UPS's vice president of fleet maintenance and engineering says that you need to have the demand and supply you need to meet each other, and getting both of them work at the same time is the problem. So the cost of some electric step van models is just over $260,000. This is about double the price of a traditional model. And next, let's look at a deal that could affect the electric vehicle industry. The world's top producer of mined copper has made a merger bid. And this is important because it could be the largest mining deal on record. Australian mining giant BHP has offered nearly $40 billion to take over UK rival Anglo American. Copper is an essential component in some renewable energy technologies. That's including, of course, electric vehicles. So the value of the metal is at its highest level in about 2 years on the London Metals Exchange. In a statement, Anglo American said that its board is reviewing the proposal. It added that there is no certainty that a formal offer would be made by BHP. The company has until May 22nd to make a formal offer. And the Biden administration unveiling its most ambitious effort yet to roll back carbon emissions in the power sector. So what's happening right now is the EPA issued new rules that would force coal-fired power plants to capture smokestack emissions. Otherwise, they'll be forced to shut down. The power plant rule marks the first time the federal government has restricted carbon dioxide emissions from existing coal-fired power plants. And the rule would also force future electric plants fueled by coal or gas to control up to 90% of their carbon emissions. And coal plants that plan to stay open beyond 2039 would have to cut or capture 90% of their carbon dioxide emissions by 2032. Now, the rules are a key part of President Joe Biden's pledge to eliminate carbon from the electricity sector by 2035 and the economy-wide by 2050. For an expert perspective on this new rule, I spoke to Daniel Turner, founder and executive director of the think tank Power the Future. Daniel, thanks for coming on our show today. So I wanted to talk to you about this new EPA rule, apparently forcing coal-powered plants to either shut down or, capture emissions. What should we feel about this?
Well, this is only happening because it's an election year. If this were such a serious catastrophe, if this was such a threat, if coal mines were such a threat to the nation, Biden would have done this earlier, right? But this is an election year. He needs to enthuse and energize the radical green groups that make up a huge part of his base. He needs their funding and their donations. And so this is why this is being announced right now. Proof of that also is the fact that these deadlines aren't for 15 years in the future. This is 2038, 2039. So how serious of a problem is it if that they have 15 years to comply? It's going to have damage to the electric grid, no doubt about it. But it shows this is not a serious proposal. This is just pure politics.
And I want to hear more about this short-term impact. Very fascinating. Can you elaborate on that?
Well, in the short term, the EPA is requiring these plants to get on board with a whole new set of compliance, and that's going to cost a lot of money, right? You're going to have to buy new equipment. You're going to have to go through new phases of monitoring and new phases of environmental quality controls, and all that costs money. And the utilities aren't going to pay out of pocket. They're just going to charge more for electricity. Electricity rates are already up 30%. Since Biden took office. So this is going to drive utility rates even higher because a lot of the country still gets their electricity from coal-fired plants.
How much does the U.S. rely on this kind of energy?
Well, about 20% of our electricity nationwide still comes from coal, and that's a huge percentage. It's way more than wind and solar combined comes from coal. Remember, wind and solar only work when the sun is blowing and the wind is blowing and the sun is shining. So people may lie and say wind is X percentage. It's only X percentage of electricity when the wind's blowing. What happens when it stops? You go to coal, you go to nuclear, you go to natural gas, you go to what works. So it's a huge percentage of our electric grid. But here's another fun fact about coal. It does more than produce electricity. It makes steel. We can't make cement without coal. And so we have an infrastructure package. Pete Buttigieg, the Secretary of Transportation, is always talking about the infrastructure package. Well, where are they going to get the coal and the steel for these roads and bridges and all this building without coal? You can't. So are we going to just pay more for it? Are we going to get it from communist China? Are we going to import it from another nation? It's all so ridiculous. It shows that there's no serious thought in these arbitrary rules. It's just pure, stupid politics.
You know, we also got the GDP numbers today, so it'd be interesting to get your thoughts on if this rule would go into effect whenever it is. How would that impact the economy?
Yeah, and if the GDP numbers are what the Biden administration claims they are, because every month they revise in the wrong directions, I wonder what the GDP actually is, because the number that came out today was almost 1.5% below estimated numbers. And so by making coal impossible to produce and to burn, all you're doing is making things expensive, right? We're not using less coal in America than we used to. It just costs a lot more. Yes, we've shut down a number of plants. Yes, we've shut down a number of coal mines, but we still use coal. It just costs a lot more. So how is that an environmental win? And so steel is more expensive, glass is more expensive, concrete and cement are more expensive. All they're doing is making the cost of goods very expensive, which explains a lot of our inflation problem. And so, again, Biden, this is all just a bunch of nonsense to appease a radical element of the Democrat Party in preparation for the November election. If this were all serious, he would have done it on day one.
Daniel, thank you so much for your time today at Power of the Future.
Appreciate it. Thank you.
All right, we're just going to take a short break now, but when we come back, Secretary of State Antony Blinken today pressing China for fair business practice. His trip is the latest high-level contact between the two nations. And a new rule that could change the internet speed you get. What is it about? We'll have the answers for you after the break. Stay tuned. All right, welcome back. What's happening today? Ford has revealed that its electric car sales have come at a major loss. First quarter revenue for its EV unit plunged 84%. This led to $1.3 billion in losses before interest and taxes, and it resulted in a massive loss per vehicle. Amazon Cloud Computing Unit is planning to invest $11 billion in Indiana, and this is going to build data centers. Big tech companies have been racing to build data centers to power AI applications, which they believe will be the industry's next key growth driver. Mercedes-Benz is underscoring the importance of China in its global strategy. Executives are saying that it will continue to invest in tie-ups with Chinese partners, and this includes automaker BAIC Group. Apple lost its top spot as the biggest smartphone seller in China. Data showing shipments dropped 6% in the first quarter. Two Chinese companies tied for first, and that is Honor and Huawei. One analyst says Apple's price promotions weren't able to offset the intense competition from Android players. And now some China-related stories. U.S. Secretary of State Antony Blinken has made his way to China to address some contentious issues between the two nations. Blinken calling on China to provide a level playing field for American businesses. Washington and Beijing have been increasingly at odds over how U.S. firms operate in China and concerns over as well Chinese exports flooding markets. So Blinken stressed that the U.S. is seeking a healthy economic relationship with China. At the same time, he's going to head on over to Beijing on Friday for talks with his counterpart. Blinken will press China to stop its firms from retooling and resupplying Russia's defense industry base. State Department officials told reporters that Washington was prepared to take steps against Chinese firms it believes are damaging U.S. security. And as well, cross-border partnerships announced between two Japanese automakers and Chinese firms. So the pairings here highlight the importance of artificial intelligence for car makers. Toyota is teaming up with Tencent, which, by the way, is a gaming and social media giant. Nissan is working with Baidu. That's China's leading search engine. Toyota will use Tencent's technology in a China-made passenger vehicle that is going up for sale this year. And then Nissan and Baidu will conduct research on AI and smart cars. By the way, Nissan will also use Baidu's AI products in its Chinese cars. All right, an FCC vote today, and it could affect your internet speed. So what's happening here is the agency has ruled to reinstate net neutrality. Net neutrality means internet providers, for example, AT&T, Comcast, and Verizon, they won't be able to speed up or slow down certain traffic. The new FCC rules ban blocking, throttling, or disadvantaging certain content, apps, or services. They also bar prioritizing them in return for payment. The FCC says it's going to take a couple of months to enact the rules. Opponents, of course, are already gearing up for legal challenges. Such cases could more broadly impact the government's power to regulate the industry. And a judge approving a $418 million realtor settlement, and this is opening doors for possible changes to the way Americans buy and sell homes. Groups of home sellers brought lawsuits against the National Association of Realtors for its standard commission structure, saying that it was a violation of antitrust laws. So under the terms of the settlement, sellers' agents will no longer be required to offer commission to buyers' agents, putting buyers on the hook to negotiate and pay their representing agent directly. Commissions are expected to fall here because they will become negotiable and competitive. Now, a final approval hearing is set for November 26. And finally, I know some of you are planning to travel this summer, so if you are, you gotta listen up now. In Italy in particular, the city of Venice is rolling out a new entry fee. The popular travel destination has become the first city in the world to charge tourists just to visit. So if you want to see the famous canals, you'll now have to pay more than $5 to enter the city for the day. The fee only applies to some specific dates, so you got to make sure to check your calendar before making any plans. All right, thank you very much for watching today. That's all the stories we have. If you have any feedback for the show, as I always say, please let me know and I will read them. And don't forget, business matters. We'll see you back here tomorrow.